Germany is a market where I suppose we're a relative newcomer in terms of residential. We've adopted a different strategy in terms of we're developing product, so new products. So it's a different strategy to some of the Patrizia investments. So and that's really driven by our particular investors in that instance. So I think the challenge we found when we started that fund. October 2013, we could buy and we could get the net income returns that our investors required. Our last investment, which was in Berlin, when it went to our investment committee, there was a lot of discussion about this is actually potentially dragging back the performance of the fund as a whole. The cap rate that was applied was quite a keen one, shall we say. And so I think in terms of that market, delivering the returns the investors want or are striving to is becoming more challenging from an institutional investment perspective, certainly on the sort of development funding perspective. In terms of the UK, there's been a lot of announcements since the beginning of the year about a number of managers and institutions coming into the UK build-to-rent market. There's a big weight of money coming in, and there's some very keen prices being paid already for product. Sub 4% in an outer London location was recently paid by somebody on something that we looked at that we couldn't get to those numbers. So I think putting to one side owner-occupier house prices, you just have to pick up the Sunday Times to read about 9 Elms is overpriced and there's a bubble waiting to burst there. It's that £1,000 a square foot area in Greater London where there's a lot of pressure. Talk to any house builder about that. But in terms of actually what we're trying to do, what a number of others are trying to do, build to rent, create this rental product, the multifamily product, whatever you want to say, it's a real challenge to get opportunities. But what we are starting to see, and we had a meeting this week with someone who was prepared, a house builder who said, I'm going to take this entire site, it's 350 units, I'm prepared to effectively not take the traditional house builder developer margin, but actually just take a contractor margin, and I'll build this for you at 25% below current open market value. And that's quite interesting for us, because then suddenly your pricing point becomes acceptable. The income returns that you're looking to generate off these opportunities starts to get within the margins. So it's an ever evolving, and in a way, if capital values do start to fall in the UK in the owner occupation market, actually that potentially gives us as a developer for build to rent product an opportunity, because the house builders will still want to build product, and actually to keep the cash flow going, then they could turn to us and say, here you go, here's a nice block of 100, 200 units, take it out for us, de-risk it for us, forward fund it for us, and keep our business going. So, to me, yes, prices are high. It astounds me what you have to pay for a 2-bedroom flat in Greater London at the moment, but I think actually there still are also areas of affordability in pockets where we can still invest.